Hi, everybody. I hope you guys are doing fine. This is Team Forex Education. I'm back again with another one. All right, before we start, I just want you guys to subscribe to the channel, like the video, and make sure you share it to your friends and family because I'm about to show you guys something that is amazing over here. So, have you guys heard about World Trade? World Trade, it's how can I say it? I don't know how I can say it if I can say it's a indices or it's a broker. I don't know, but I hope you guys you will understand. Yeah. So World Trade has got beautiful synthetic indices that you can trade. Okay. So there is a lot of them actually, right? So the good part about these indices, it's more like you are trading the other indices that you know, right? But the good part about this one is that these indices on World Trade, you just have to find a trending market. Okay, you just have to find a trending market. Once you get a trending market, that's it. That's the direction. It doesn't go against you. You get my point. So for example, if you know that you just caught like a bullish move, and that bullish move, it keeps going, there's no unnecessary like retracements. That's the good part about this. So once you catch the trend, right? For example, let's say the market is forming higher highs and higher lows. There is no unnecessary retracements just to continue to the upside. No, it doesn't work like that. Okay. So once you catch a trend, right, you keep buying with it. Okay. You keep buying with it. And this thing, like it works and it pays so much money. Okay. So I want you guys to create your own accounts using the link below in the description. Open, register your trading account and fund, okay, and fund whatever that you can manage, fund and give it a try with what I'm about to show you right now. So let's get started. So I actually analyzed this trade, right? This is a gain 999. Okay, of course there is um, um, a lot of indices that you can trade, right? There's a lot of them, but I'm on gain 99. So let's start from this one. So as you can see over here, the market has been pushing down, right? Pushing down for some time. Okay, it's been going down for some time. You can see you don't have to complicate it, right? You can see, guys, this is a downtrend. I don't know, I don't know, this is a downtrend. So meaning that the market is going towards the downside. Okay, the market is going towards the downside. So if the market is going towards the downside, what do? You only look for sales, bro. I don't want to see you buying on this market. You don't buy here. Okay, you don't buy. I'm going to show you a few things. For you guys to understand the market, okay, in a very beautiful way, you must understand liquidity, okay? But it's not like I want to go dive in because if I dive in too much, you guys are not gonna understand. So you must find liquidity. Once you just get the liquidity, and then together with your direction, if the market is going towards the upside or going to the downside, that makes it beautiful because now your POIs possibly they're going to hold. Okay, I'm not saying 100% because there's nothing like 100%. Of course, losses will be there, but the majority is going to be the winning trades than losing trades. Right. So as you can see over here, guys, we've got gain 999, right? So what is happening over here? The market has been pushing towards the downside, right? So I saw this potential trade over here. Okay, I saw there was a hidden order block. Okay, I don't know if you guys can see it, but I'm just gonna highlight it for you guys over here. There's a hidden order block over here, right? So you can call it like a rejection block, okay, if you want to. So when I speak about a hidden order block, is a rejection candle. Okay, it's a rejection candle. Okay, as you can see over here, the market actually was rejecting. Sorry, man, where's my pen? Just trying to draw this thing so that I can make things easier. Okay, so as you can see over here, this is a rejection. Okay, the market gave us a rejection, right? So this area Okay, there is an order block right there. Okay, there's a hidden order block, right? So what we want to see price coming inside that rejection candle. After it comes, price must not go above it. We don't want to see price to go above it. Price mustn't go above it, right? So we must make sure that price does not go above that candle. Because if it goes above that candle, I promise you this is going to be a different story, right? So we have this rejection candle over here, right? So we want to see price coming inside, okay, that candle, and then price must reject again, okay, must reject again inside there. Remember, I'm doing this thing on a 4 hour time frame. I'm not doing this on a 5 minute or 1 minute. No, get me right, on a 4 hour time frame. Then from there, what do you want to see? Obviously, we're going to be looking for some liquidities that price has been giving, right? So as you can see right here, we do have liquidity inside, but it might not show. But if we go to a 1 hour, 30 minutes, you'll be able to see. So this is the target where price made the low. This is the target where price made the low, right? Then from there, we're just going to change our time frame to 30 minutes time frame. Now, I want us to look at the 30 minutes time frame. 30 minutes time frame, what do we have? Remember that rejection candle. This is how it looks, right? And if we can dive in, you're going to see that it's an order block. If you go to M15, let's check. You can see it's an order block, right? But let's go back to 1 hour or 30 minutes. That's what we want to be dealing with. Okay, so I think 30 minutes is beautiful. So as you can see over here, price entered inside it, and there was liquidity that was being formed inside here. This is liquidity that was formed inside here. That's liquidity that was formed inside there. All right. So why are we saying this is liquidity? You can see there's a double bottom, double top. 1, 2 over there, and price dropped, right? So somebody is going to be looking forward to sell from this area. Somebody's going to look forward to sell. So you see, people took sales, it dropped a little bit, then price took them out. I don't want you guys to be those kind of traders, okay? So let's dive in more deep. So you can see over here, price took the liquidity and it was coming inside where the rejection broke, the one that we found on a 4 hour, right? So the moment price now entered inside there, what else do you want to see? We want to see a demand falling. We want to see a demand falling. So let's go to M15 and look for a demand, right? So as you can see, we've got a temporary bullish market structure is what we are going for. Okay, one, high highs and high lows, right? I'm not going to draw them accurately, but I want you guys to understand something. You can see this is a bullish market, right? Inside here, price is going up, right? So what we want to see is the last demand that price created. Guys, are you getting me? Are you getting me? Are you getting me? Demand, the last demand that price created. So as you can see, this last demand, price rejected inside a zone. Price rejected inside a zone. After rejecting, created a what? A demand and pushed up. So this demand, it failed to take the previous high. It failed to take that previous high, right? That means this demand is weak. This demand is weak. So what else are we looking for? If that demand is weak, that means that there is more that we have to dive in, right? So if that demand is weak, that simply means that something beautiful is communicating. Okay, what else are we looking for? That means this demand over here, it is the level that we want to be trading from. Okay, so you can see price, it pushed down into that demand. After pushing there, it simply broke it. Now, look the way how it broke it, right? It made consolidation. There is something that must communicate with you. It didn't just come impassively. No, okay? It didn't just come impassively, but it consolidated inside, trying to show you that there's a continuation to the downside. There's a continuation to the downside. It entered here. Consolidated a bit. If you think you can't see it, I'll show you. Let's go to a 1 minute or 5 minutes. Let's go to 5 minutes. Okay, so you can see after price entered inside here, can you see the consolidation? Beautiful consolidation. Beautiful consolidation. Then the market kept on going to the downside. Okay, are we together over there, guys? Are we together? If you know that you're getting value on this video, I want you guys to like, subscribe to the channel, share the video to your friends, and make sure you comment that you have learned something. And also make sure you register your trading account if you don't have any. Use my link in the description. The link is there. Make sure you register and find your account. Go and test this and get back to me. Get back to me after you do that. I'll show you that what I'm doing here, I'm not playing. It's real, okay? So let's go back to the M30, right? So as you can see, price after gave us the, let's use an M15. So as you can see, price after gave us a what? A demand zone that failed to break the previous high. Price broke it. After breaking it, came again inside the zone. That demand zone that failed. Then from there, what do? You execute your trade. And this is your target below over here. You execute your trade, right? You execute your trade and that's your trade. So this is a trade that I actually caught today, right? This is a trade that I actually caught today. And I promise you guys, it's not just about luck here. No, it's about understanding the market, just like how I've just shown you guys on how to do it. Understand the market and everything becomes easy. Understand the market and everything becomes easy. Simple as that. You don't have to complicate anything. Don't complicate anything. I always tell people, when you go on the market, don't overthink it. Don't overthink it. Okay? Don't overthink it. Because if you're going to overthink it, it won't make sense. So the reason why I didn't take my sales from up here, yes, it was going to be valid, right? But we don't want to risk it that way because we're not sure how the market was going to react. Okay, especially when it was coming from that demand. Okay, that's more demand over there. What if price pushed up? What if price continued going to the upside? What were you going to do about it? What were you going to do about it? Nothing, right? So I don't want you guys to be those kind of traders. I don't want you to be to gamble, right? I want you guys to trade with understanding. That's the most important thing. Trade with understanding. Because there's a reason why we are saying this demand zone is very important inside here. Because we know that if this demand zone fails to break the high, this demand zone over here, it fails to break this guy over here, that means this guy is weak. Okay, then it must come to confirm and break. In other way, it's trying to show you a breaker block, right? A breaker block. But I don't want to speak too much about the breaker block because you guys will end up doing wrong things. You're not just going to be looking for the model. You're not going to understand the market. So please, guys, don't look for the model only because okay, it's a breaker, then I'm just going to go to M15 and look for a breaker block. No, go to your higher time frame. Go to your higher time frame. Okay, go to your higher time frame. Understand what's going on a higher time frame. Is the market buying? Is the market selling? If you do it like that, I promise you, you will get beautiful trades. Always, you get beautiful trades. Always, always. You never go wrong. Because if you trade the model, you're not sure. Okay, if you trade the model, you're not sure of what's going on, right? So don't be that kind of a trader who's just going to be looking for trading models only. Then you feel like you're done. No, go to the higher time frame first. Go to the higher time frame, and then after you do that, you can now go to your smaller time frames to execute. I promise you, this guy is going to hit my take profit, and this is not by luck. This is not luck. This is genuine knowledge, right? Because there's no way, guys, I'm going to show you something. Let me open your eyes. If price is coming from this zone over here, if price is coming from this zone, there's no way the market, like, you're just gonna, like, if the higher time frame, right? If the higher time frame, okay, price takes liquidity, okay. If this is a higher time frame over here, okay, liquidity taken out, then here structure, liquidity, breakout structure to the upside. If this is a higher time frame, right, and market price starts pushing to the upside, and this is our target, there's no way you must look for sales. Those sales will not last. Because what is happening over here is that if you go to smaller time frames, there is also, small buying trends that are being formed. All right. I don't know if this can make sense because I don't want you guys to be traders who are just gonna wake up and just look for models. Don't do that, guys. Look for direction first. Then from there you can look for models on a lower time frame. I hope this makes sense. I hope this makes sense, guys. Other than that, Team Forex Education, I want you guys to like, share, subscribe. If you know you've got, if you know that you've got some value in this video, comment. I want to see a comment and create your trading account using my link in the description. Love you guys and see you on the next one. And yeah, peace out.